Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. Scott, great day for markets yesterday. All indices up, 3% or more. What are you going to do today with futures kind of off a little bit? Would you be taking profits off of yesterday's rally?
At the end of the day, I sent out a note that the strategy has to change a little bit. You have to start becoming a bit more tactical. That if you want to hold 4 to 8 positions or multiple positions, you know what, short some spiders as a hedge. So at the end of the day, I took out my 4 or 5 positions and I also shorted the spiders. This way, when you come in today, futures are down 7 to 8 handles. You could cover your spiders, create some cash flow, and then add to stocks showing relative strength. So if you were one directional during the course of this move, so if you were playing it to the long side for this snap, at this point in the range, I think it's more prudent to have a little bit of a hedge on, but stay with your longs because I think there's more upside to this market.
Well, I was going to ask, so is this like a blip in a bull market we're seeing today or a blip in a bear market?
Well, for today, I think it's digestion in a bull move. I'm not saying we're back in a bull market, but as of now, there's been enough participation from the lagging sectors. There's also been enough participation from the leaders that were all up about 3 to 20 points yesterday that it can continue. So at this point, digestion is good, sideways action is good. Take a quick look at the chart. I want to show you a level that I would like to see hold. This was the move, off the low. This was at 80-20 trade above 1100. Quick move, Friday, jobs number, we paused. And then we took back the 50-day moving average yesterday around 1175 and closed strong, right into some previous resistance and ahead of big resistance. So today, if we could go sideways and hold the 50-day moving average above 1175, I would say that's a big win for the bulls.
But don't chase any shorts. So if you didn't short overnight, don't short now. You want to be covering and then looking to add to a tier 1 position, lightly invested.
I would say, for a cute short, you could get a little bit of a move down to that 1175. And we're opening, I think, around 1188. So there is some room. I'd rather see you try and buy pullbacks in the best stocks than trying to play cute shorts. I told our traders on the floor that yesterday when they were trying to short when we were up 220 points in that last 40-minute pull-in. Meanwhile, they blasted into highs, and that wasn't the way to go.
All right, 2 areas that might be interesting to look for, though, to go long would be industrials, perhaps, and agricultural stocks. They really held up yesterday after just being totally beaten down. Is there a composure change in these 2 groups?
I think off the lows for market timers, these have been very profitable, and I do think they can continue. They are extended into the upper end of the range. Same story here, a little digestion would be good. So if you take a quick look at the XLI, you will see, it's coming right into this upper end of the range or piercing through this minor downtrend. Okay, so at this point, there is some room back up to 33, but look where we came from. I'd like to see it hold above 30 and a quarter, go sideways, hold this moving average, and then it could continue. I think this is no longer lagging or a headwind for the market, and there's opportunity in both of these sectors.
And ag, same one, be looking at the move?
Yeah, the move, they're at resistance as well, but you had some nice moves there off the lows, digestion, then higher.
All right, let's go to what happens, though, with earnings, because, of course, after the bell today, we get Alcoa reporting. What's a good strategy, Scott? I know you don't take stocks into earnings, but this could be a very dicey quarter in terms of the expectation game. Expectations are so low for some of these companies that they just meet, they could pop, and vice versa. If they disappoint, they could just get hammered down. Which way do you think we play out here?
Well, there are 2 camps right now. There's a camp saying that corporate earnings have been the bright spot, that earnings have been good. They've been, corporations have been acting, on all cylinders. They're streamlined, they're efficient, and, the Washington might think that's bad, but anyway, for the stock market, that's good. So we're going to look for, just guidance. We need to see that guidance isn't lowered tremendously. Maybe a little softer guidance could be priced in, but if you see some more guidance cut by a third or a half, it could take some of the wind out of this market. With Alcoa, I think it's so funny that it kicks off earnings season because Alcoa is such a non-event. The stock really doesn't do much.
What are you going to do?
There you go. So for psychology, it's okay. What I would like to see, if you take a quick look at Alcoa, how to move off the lows, but nothing tremendous here. Maybe another sideways day. But if they come in line, I think you can get a pop back up to 1150. I think it's okay to take. I don't think it's going to be a blockbuster. This was your trade. If you want to not take stocks and earnings, take some in the money calls. And then let it play out that way. That's the way I usually play earnings. Is I trade them up into earnings, and then I take in the money calls if I think there's opportunity there. So at least I know my risk is my premium paid.
And lots of opportunities this week with Alcoa. We have JP Morgan and Google also on Thursday. All right, let's round it out real quick with silver. We had a really nice 2% pop on Monday, almost hitting that 1700, but really couldn't hold it. What are you going to do today? We're seeing some light profit taking here.
I think that both of these, silver and gold, are trying to resolve to the upside. I'd stay away from silver unless you have to trade it. Gold is acting a bit better. I think it does have room above 1700 On this soft open, maybe you buy it for a negative to positive move. And the GLDs, if I show you real quickly, it does have some room higher, probably to fill this gap up to, I would say, about 167. So I would stay with it long up until this resistance.
All right, thanks, Scott. And if you want our entire take on how to trade this market and more of Scott's great stock picks, it's a tongue twister I just can't get. You can check out the entire Morning Call on the Street.